Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Core Natural Resources Inc. quarterly report. Core Natural Resources, Inc. offers a range of businesses and services including metallurgical coal production, thermal coal production, coal export terminal services through the Port of Baltimore, mining and preparation of bituminous coal, marketing of coal to various end users such as power generators, industrial users, and metallurgical users. These services are provided through two main segments: the Pennsylvania Mining Complex, PAMC, and CONSOL Marine Terminal. The significant decline of Core Natural Resources, Inc. stock price. Core Natural Resources, Inc. SCNR stock price has plummeted over 31.81% in the past year due to a combination of negative news events and financial challenges. The company's reliance on exports was severely impacted by tariffs imposed by the Trump administration, causing its stock to fall over 40% from its late 2024 peak. Falling energy prices also contributed to CNR's decline, with revenue dropping 15.2% in 2024 compared to the previous year. A combustion-related event at the Leer South Longwall mine further exacerbated the situation, leading to idling and significant costs. Operational struggles and financial vulnerabilities have also taken a toll on CNR, including negative profit margins, high debt-to-equity ratio, and severely eroded shareholder value. The company has missed earnings expectations multiple times, with notable instances in Q2 2025 and CONE 2025. Shareholder dilution and insider selling activity have further contributed to the decline. The merger of CONSOL Energy and Arch Resources in January 2025 aimed for synergies, but ultimately led to operational and financial performance issues that have compounded the stock price drop. The company's declining profit margins, from 18.8% to 0.6%, are a clear indication of its struggles. The primary drivers of revenue growth or decline for a company can be attributed to several key factors. On the growth side, significant contributions come from strategic partnerships such as the merger with Arch, which added $513 million in revenues from coal sales. Additionally, operational improvements at Legacy, CONSOL's PAMC, and Baltimore Marine Terminal have increased revenues by $9 million and $4 million, respectively. The PRB segment has also experienced substantial growth across all metrics, including tons produced and sold, revenue per ton, and more. On the decline side, reduced metallurgical coal benchmark prices have led to a decrease in revenues at Legacy CONSOL's Itmann mine by $14 million. Industry-wide factors such as weak demand, surplus production, tariffs, and trade policies also play a significant role in revenue growth or decline. Furthermore, excess balance sheet cash exceeding $125 million can lead to revenue growth through strategic investments or financing opportunities. Net income and profit margins decline due to recent merger and increased costs. The company's net income has experienced a significant decline over the past year. For the 3 months ended September 2025, net income decreased from $95,632 in 2024 to $31,598 in 2025, representing a drop of approximately 67%. The 9-month period saw an even more substantial decrease, with net income plummeting from $255,584 in 2024 to -$74,235 in 2025. Profit margins have also taken a hit, with the net profit margin for the 3 months ending at 3.15% in 2025, down from 17.2% in 2024. The 9-month period saw an even more drastic decline, with the net profit margin dipping to -2.38% in 2025. The merger with Arch on January 14, 2025, is likely a contributing factor to this decline. Additionally, the company's cost of sales has increased relative to revenue, further exacerbating the issue. These factors have combined to significantly impact the company's financial performance over the past year. The company is indeed generating positive operating cash flow. This is evident from multiple sources within the financial summary. On page 5, the operating cash flow for 2025 is reported as $1,234,219. Similarly, on pages 14 and 23, the net cash provided by operating activities for 2024 and 2025 are stated to be $355,080 and $611,581 respectively. Furthermore, several other sources confirm this positive trend. On page 24, it is explicitly mentioned that the company is generating positive operating cash flow. Pages 49 and 52 also support this assertion, highlighting cash generated from operations as a source of liquidity and summarizing the company's ability to generate positive operating cash flow. Only on page 51 does there appear to be an inconsistency, stating negative operating cash flow. However, given the overwhelming evidence supporting positive operating cash flow, it is reasonable to conclude that this statement was likely an error or oversight in the report. The company's debt level and interest expenses have undergone significant changes. The long-term debt has increased by a staggering 253% from $94,794 to $334,512, while total liabilities have risen by 84%. This substantial increase in debt is reflected in the significant rise in interest expenses, which have jumped by $14 million. Additionally, the company recognized a loss on debt extinguishment of $12 million. These changes indicate that the company's financial situation has become more precarious, with increased borrowing costs and potential risks associated with debt management. The company's financial performance varied across different segments. The Baltimore Marine Terminal segment and the Metallurgical segment stood out as strong performers, with significant increases in adjusted EBITDA and revenue. The PRB segment also showed improvement, with a substantial increase in adjusted EBITDA and total tons sold and produced. On the other hand, the high CV thermal segment struggled, experiencing a decline in adjusted EBITDA across multiple periods. The Metallurgical segment initially performed well, but later saw a significant decrease in adjusted EBITDA. The PRB segment's initial performance was poor, with no revenue or adjusted EBITDA reported. The Baltimore Marine Terminal and high CV thermal segments were the only ones to consistently perform well throughout the period. Management is optimistic about the company's outlook, expecting to collect the full amount of acquired receivables. The combined entity will also benefit from significant operating synergies through optimized support functions, enhanced marketing opportunities, and an expanded logistics network. However, management acknowledges that certain financial guarantees may expire unfunded. Despite a decrease in net cash provided by operating activities due to merger-related expenses, the company has successfully refinanced its debt and amended its revolving credit facility, positioning itself for future growth in seaborne markets driven by increasing demand for steel, infrastructure, and energy. The company has a history of returning value to its shareholders through both dividend payments and share buybacks. In recent years, it paid dividends totaling approximately $5.1 million in 2025 and $5,364 in 2024. Additionally, the company has been actively buying back shares, retiring over 2.8 million shares in the 9 months ended September 30, 2025, and another 747,351 shares in the same period of 2024. Concerns about inventory buildup and supply chain disruption. The company's financial summary highlights concerns about inventory buildup. A significant increase in non-recurring expenses related to fair value adjustments to inventory is evident, totaling $2,559. Furthermore, a substantial rise in inventory levels from $96,201 to $407,500 between December 31, 2024 and September 30, 2025, raises concerns about potential supply chain disruptions. These developments suggest that the company may be facing challenges in managing its inventory effectively, which could have long-term implications for its operations and profitability. That concludes the financial summary for Core Natural Resources Inc. Feel free to comment below, and I will be happy to answer them when possible.